Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and on this special edition, we're going to be focusing on the RBI announcements. We've just seen RBI Governor Shaktikanta Das make his statements as far as the Monetary Policy Committee observations and decisions have been as far as the policy rates are concerned. The RBI's rate setting panel has actually hiked the repo rate for a fifth straight time, and as was widely expected, the MPC in a 5:1 majority decision has raised the repo rate by 35 basis points, which now comes to 6.25%. However, this rate hike has been lower as compared to the sharp 50 basis points of rate hikes that we've seen in each of the last three meetings. The stunt is also focused on the withdrawal of accommodation, and as was widely expected as well. Joining in to discuss the key takeaways from the policy with me now, I have Mr. P.K. Basu, Chief Economist at ICICI Securities. Also joining in is Mr. Anand Adhikari, Managing Editor of the Business Today magazine. Welcome to both of you, and thank you so much for taking the time out for this discussion. Mr. Basu, let me kickstart with you. I want to understand your first thoughts and the key takeaways from the statements made by the Governor, and also help me understand, since towards the end of the statement he did say that, I'm going to be leaving it up to you to really find out whether the statement has been hawkish or dovish. So what is your thought?
Well, I think the statement is broadly in line with the expectation. They've raised the policy rate by 35 basis points to 6.25%, which I think will ensure that we'll have a positive real repo rate from January onwards. And perhaps even in December, inflation could well be slightly below the 6.25% mark. So going forward from January onwards, base effects will start helping. And we've also basically in November started seeing evidence of an easing of both food and fuel inflation. Okay. Globally, of course, the fact that Brent crude prices have eased off is a significant positive. And if you look at the October to March period last year, the average Brent crude price was $90 a barrel. We are below that now, and likely to stay below that for this entire 6-month period. And that will help to keep, to bring inflation back into line with the RBI's target, which of course is 4% with a 2% margin on either side. So 2 to 6% is the target rate. It's been uncomfortably above that for the whole of this calendar year.
Sure.
But I think from next month, we'll begin to see a positive real rate. And I'd say that the MPC is marginally less hawkish. I'd say it's not quite dovish yet, but it is. It has moved away from an aggressively hawkish stance, which, I mean, obviously they remain focused on trying to bring inflation back down towards 4%. Yeah. But they are now beginning to succeed in that policy transmission has worked. Both lending and deposit rates have risen significantly, and that is beginning to cool the economy somewhat and bring inflation under control.
Okay, understood that. Mr. Adhikari, your first thoughts. Mr. Basu believes it's less hawkish as far as the MPC is concerned, but not dovish as of yet. But do you really believe the RBI has really not gone overboard, as it really still needs to fuel growth amidst the forecasts of the deteriorating global outlook and the chances of the price pressures that are easing from the multi-year highs as well?
So clearly, Sakshi, it's time to support the growth. If you see the growth projection now, it has gone down from 7% to 6.8%. But yes, we are seeing inflation moderating. I mean, if you see the retail inflation, like 7.79%. But when I see the prediction, for 2023, 6.7, which is still high, and Governor, said that inflation will remain higher. I mean, above 4%, target in the next 1 year. But clearly, if you see the U.S. inflation, that is also coming down. Rupee also, in a way, it is stable around 82, 86. But I just want to focus more on the lag effect. Sure. But there's a risk of over tightening. When we saw big hikes, 50 basis point hike in the past. Now they have moved to a 35 basis point hike. It's the impact of this past hike and liquidity tightening
Sure.
measures is yet to be seen. So in that sense, I would really welcome, this 35 basis point,
Right.
hike. But yes,
Okay.
it's time to support the growth now and react based on the data.
Okay. Mr. Basu, I wanted to understand, the governor's statement where he mentioned that, further calibrated monetary policy is warranted to keep inflation expectations anchored. How do you read this statement and what does it really imply on the future course?
I think the future course will remain data influenced. My view is that this is the last rate hike for this cycle. But of course, the RBI will continue to keep a close eye on inflation. Now, one of the major risk factors is what will happen to global crude oil prices, given the imposition of a cap on Russian oil sales and oil exports at $60 a barrel. Now, that actually isn't significantly below the Urals prices that prevailed until a week or two ago. But it is potentially very disruptive. And the market initially has responded reasonably well. Brent hasn't spiked as much as it might have, but there are risk factors. I mean, we'll see what happens with Russian oil supplies over the next few weeks, and that is definitely a source of extreme uncertainty.
Right.
So that needs to be kept in mind. Food inflation is, of course, the other factor that is always a bit unpredictable in India. But it does appear that the Kharif harvest was very good.
Yeah.
With the exception of rice, most other crops have done well. The sowings for the Rabi crop, particularly for wheat, are up sharply. So all of that augurs well for food inflation. And my basic view then is that food inflation will moderate, and so will the headline CPI inflation fall below 6% by January. And once that happens, there is no need for the RBI to continue to tighten further anytime in the next few months.
So, sir,
Although, of course, the Fed.
do you mean to say that the 6.25%, is that the peak rate, or do you really expect one more?
This is my view is that this is the peak.
Okay.
Of course, for the Fed, the US Fed is going to be raising probably 50 basis points next week, and will need to take it up to about 5% by March. So the US is going to be raising. But remember that the US has a core inflation target, core PCE inflation target of 2%, and they are at 4.5% for that at the moment. And so they are very far. The inflation is currently well above the Fed's target. Whereas for India, yes, the latest inflation read is still above the target range of 2 to 6% for headline inflation. But the November read, which we'll have in about 5 days' time, should moderate significantly, perhaps to around the 6.3, 6.4% mark.
Okay.
And in December, once the December read comes out, we'll probably be at a positive real policy rate. And that is relatively good in the world today. Very few countries in the world have a positive real interest rate at the moment. India will be among the first to move to a policy to a positive real policy rate. In Asia, for instance, the only one I can think of that has a positive real rate is Indonesia.
Okay.
So we'll be the next after Indonesia to have a positive real rate.
Okay, noted that. Mr. Adhikari, I wanted to understand from you, right now the markets are down in trade, 120 points gone for the Sensex. It's trading at 62,506. It was absolutely flat just when the governor really finished his statement. What has really disappointed in the statement as far as the markets are concerned? Is it the stance I mean, like the central bank has really not changed its stance from the current withdrawal of accommodation. There was some expectation from some of the analysts that it could be changed into a dovish stance. How do you read this, Mr. Adhikari?
So, Sakshi, I'll just one comment on Mr. Basu. When he said that rates have almost peaked.
Yeah.
One is the sticky, the core inflation, which governor also talked about, and he said that it exhibiting, stickiness, and he also said that they want to break, this core inflation persistence. So that's one area where I see, a very sticky, core inflation. And second, the terminal rate, like, in India, I mean, I'm expecting another 25 basis point, hike, and then US, the projections which I have seen, it ranges from 5 to, 5.75. So maybe they will move from 75 basis to, 50 basis point hike, but they are not done yet. And with, this interest rate differential narrowing, I see, some more hikes, maybe, 25 basis point here in India.
Okay.
And second, even in the CAT part, even though we are seeing, rupee value around, 82, but the higher, current account deficit is a big concern. And more than that, the financing part, I mean, if you see, the FI inflows, or if you see the FDI, or even the PE and the VC money, so I see, a lot of concern there. Now, coming back to the market, part, if you see the growth, we are going down from, 7 to 6.8. I mean, that's a big concern for the, stock market. And then governor talked about three things. One, he said, about this geopolitical, headwinds from geopolitical front. Second, he talked about the global slowdown, and third, he said about the tightening, the global financial conditions. I see these as big risk factor because it's an evolving situation, and I'm sure market must be reading something from these statements. Thanks.
Okay, understood that. Mr. Basu, I wanted to take that one point with you as well, as far as you said that, which is a general consensus as well, that the inflation print may be moderating across the markets, even as far as the core inflation is concerned, which is high as of now, but may soon, gradually move towards lower as well. But would this give the central bank the impetus to now perhaps also look at reversing the cycle as well? In case you believe that the peak is now, how soon can we look at the reversing of the cycle?
That is very far away. Partly because headline inflation is still going to be quite close to 6%. It'll probably come down towards 5% by March, but that is still not a comfortable level. And I don't think the RBI is going to defy the global situation and ease monetary policy anytime soon. The way I look at the U.S. actions, I expect that the U.S. will take the Fed funds rate to 5% by March and stay there for another 6 months or so. And India too, I think will retain this policy rate for some time. And in terms of growth, I think the fact that the rupee has depreciated over the past month, despite the fact that the dollar has generally weakened a bit against most currencies, is something that I was expecting to happen. Essentially, what's happened here is that the rupee had appreciated a lot against other currencies, the pound, the euro, the Japanese yen, Korean won. So we've seen some depreciation against all those currencies over the past month, and that is the main form of easing, if you like. I mean, it's not real easing, but it is a way to provide a little bit of a boost to the export sector and essentially improve the terms of trade by allowing a little bit of further rupee depreciation. Okay. So that I think is one aspect, but otherwise I don't expect the policy rate to start being cut for most of next year.
Okay.
most of next calendar year.
But on the rupee itself, I mean, do you think for now the rupee depreciation and the free fall is over for now at least?
Well, first of all, I don't think it's a free fall. If you want to see a free fall, go to Japan. That's where you actually had a free fall between March and mid-November. About a 25% fall in that short period. So those are really serious depreciations. We've had a year of dollar strength, but I think the period of dollar strength appears to have ended, and that is actually good for emerging markets in general. Um, India, because India's, if you look at the rupee's depreciation against the US dollar, it depreciated much less than all those other currencies I mentioned previously: the euro, the yen, the Korean won, and actually even the Chinese renminbi. So uh, that has, at least to some degree, affected India's merchandise export performance in recent months. But the major factor hurting India's merchandise exports were the export duties.
Yeah.
Now, those were removed in the third week of November, at least for steel, for iron and steel products. And those account for a little over 10% of India's exports of goods in normal times. So we'll see some improvement there. So that's not really in the domain of monetary policy, but I'm not particularly worried about the current account situation.
Yeah.
The services exports continue to be very strong, and so the current account deficit, I think, is going to remain reasonably well contained at around just over 2% of GDP for the fiscal year. And we've seen that foreign reserves have improved sharply over the last 3 or 4 weeks. So
Right.
So the external environment is actually quite sound. And as the RBI governor quite correctly pointed out, India's external debt is a particular strength. India has deleveraged over the last 8 years. External debt to GDP was 24% in 2014. It is now 19%. And in a global context, that really is a standout situation. India has an extremely low external debt to GDP ratio, and that helps. That helps in an environment like this when money is being withdrawn from emerging markets. India, of course, has seen modest net inflows since July.
Right. Anand, since you were pointing out the risks earlier, I wanted to find out what, according to you, is the bigger risk that the economy faces right now and the RBI should be more worried about? Is it inflation or is it the growth slowdown? For now, the projections have been lowered for growth. It has been increased for the CPI inflation, at least as far as the October to December quarter is concerned. That's been raised slightly upwards as well. Also for the January to March quarter 2023 to 5.9 from 5.8% as well. The growth forecast for FY23 has been lowered to 6.8%. What, according to you, is the bigger risk?
Sakshi, so I see two big risks. One is the crude side. If you see, after the winter, news demand, on the one side, some easing, this COVID.
Okay. Anand, I think we'll get back to you. There's some technical issue. We are not able to hear you very clearly. But Mr. Basu, I'll pose the same question to you. Right now, what do you think is the biggest risk that the RBI really faces?
Well, I think the RBI obviously has to remain focused primarily on inflation. And inflation has not yet been wrestled into control, but the prospects are looking better. And that really is what the RBI is, I think, trying to say in today's MPC statement. Now, in terms of growth, I think the RBI is a bit overcautious. It's looking at 6.8% growth. I have maintained my forecast at 7.5% right through the last 6 months.
Okay.
While other forecasters were moving up and down.
Okay.
And I think that the second half, particularly the fourth quarter of the fiscal year, base effects will help a great deal. And
Okay.
I think what the economy is being driven by now is a pickup in fixed investment spending. That if fixed investment spending continues to accelerate as it has over the last few quarters, then I don't think there'll be too much to worry about. That really is the key. We saw Finance Minister Nirmala Sitharaman also sort of admonish businesses for not coming through with investment spending. I think the global environment was not that helpful. China has overinvested massively over the last quarter century and especially the last 10 years. And so, there is overcapacity in many of the globalized sectors and industries. But now that China is struggling, I think there is a good opportunity for India to take the baton. And we are seeing that to some degree in the investment spending numbers over the last 5 quarters. And I think that really is the key thing that the RBI too will be paying a little bit of attention to in terms of the growth prospects. They are quite cautious about growth, but I think the investment recovery is looking good.
Okay, and what about the capex cycle? Do you see that getting delayed anyhow, or is that going to be on track pretty soon?
That's basically what I'm talking about, right? The capex cycle is what is picking up. And of course, a lot of that is public investment, but private investment spending too, I think, is being crowded in by the fact that the government's market borrowing is well contained so far this year, particularly because of the strength of government revenue. If you look at tax revenue, corporate tax, income tax, and GST revenues are very strong, way above the targeted levels in the budget. And as a consequence, the fiscal deficit remains well contained. I think for this year, the fiscal deficit will be below 6% of GDP. And that, the lower market borrowing by the government will continue to crowd in private investment, which is essentially what is now happening. I think there are some worries about MSME investment and the financial health of MSMEs. But broadly, we've had a lot of announcements of big capex plans by some of the largest corporates, and I think announcement is one thing, actual implementation is another. But now I think we're beginning to see more and more evidence of the actual implementation of new capex across the private sector.
Okay, let me step away from the macros a little bit. Anand, let me come to you. I want to understand from most of our viewers' point of view as well, what they may be worried about is, how much do their loans get expensive by now? Help us understand how much gets passed on from here to the borrowers, what already has been the impact of the previous 1.9% hike that we've seen so far this year, and what do they expect now?
So, Sakshi, most of these loans today are, benchmarked with the repo rate or the external rate. In most of the cases we have seen, this pass through, immediately. But if you see, when you take a loan from a new bank where they are building a mortgage book, the 100% is external linked. But in case of borrowers who have taken loan earlier from, let's say, SBI in MCLR or a base rate, that take time. But in most of the cases, since they are benchmarked with the repo rate and the other external rate, there's an immediate pass through. I mean, that's what we have seen.
Okay, and depositors, do they have any chance to benefit from this hike?
Depositor, we have seen some lag, on the deposits, side, but I'm sure with the way the credit growth is growing, deposits have to catch up and banks have to increase rates. So, I expect rates to go up in the near future on the deposit side also.
Okay. Mr. Basu, there were some very interesting anecdotes also shared by the governor in his speech today and his statement. He kept on using words like we have an Arjuna's eye on the way the economies are, going, the pace of the growth right there. We are looking at how the global hurricane is going to impact, and we'll be nimble-footed as far as our actions are concerned as well. What do you make of these kind of statements? I mean, what does it indicate to, our own banking systems as well?
Well, I think nimble-footed is a very apt description of what the RBI has done over the last 2 years. Okay. It has managed the situation remarkably well, and particularly, it has managed an unusual period of high global inflation. Globally, inflation is much higher now than at any time in the last 4 decades. And relative to that, India has actually had a relatively normal period. I mean, India's inflation levels are generally higher than most trading partners. So if you look at the real effective exchange rate, normally the inflation differential is against us. India's inflation is higher than trading partner inflation. This year, India's inflation rate is slightly lower than the average trading partner inflation rate. And so, um, we've had some modest depreciation of the nominal effective exchange rate, but in real terms, there's been modest appreciation, as the governor pointed out. So we have I think the RBI has demonstrated its nimble-footedness through this, and it had to be particularly nimble-footed in dealing with the fact that it was outside its inflation target and needed to provide an explanation to the government. But I think the explanation was reasonably sound, given that global inflation was a lot higher than normal, and of course we had the Russia-Ukraine war adding to inflationary pressures. So all of that, the current RBI regime has actually acquitted itself very well over the last 2 years, and I think India is about to now is almost out of the woods in terms of dealing with this period of unusually high inflation.
Okay, just last word from you, Mr. Basu, and I'll take it across to Anand as well before we wind up this show. So you believe the rate hike has peaked at this level, 6.25%. A large part you don't see any rate cuts following. So a pause for how long?
I'd say a pause for at least the next 9 months, and then look at the situation. If inflation continues to moderate, then there will be an argument for rate cuts in the final quarter of calendar year 23, but not before then. I mean, given that the global inflationary environment hasn't eased off entirely, I don't think the RBI can begin to contemplate cutting interest rates before about September, October next year. Now, if the Russia-Ukraine war ends, for instance, and oil prices moderate quite significantly, then of course there could be an argument for doing it a little bit sooner than that.
Okay.
But really, unless growth is under threat, I don't think the RBI will be in any hurry to start cutting rates.
Okay, well, on that note, thank you so much, Mr. Basu, for being with us and sharing all these insights from the governor's speech. We shall hope to connect very soon with you again to understand more about how the way the economy is going and how to understand these macroeconomic data points as well. It's been a pleasure speaking to you, as is always, and good to have you on Business Today TV. And with that, we come to an end of this discussion. Well, the RBI has delivered its announcements on the policy decisions, 35 basis points of a hike yet again. Mr. Basu believes that this could well be the peak, 6.25%, and then we could be headed for a long pause before we see the rate cycle reversing and the rate cuts happening. That could be not earlier than September and October next year as well. But on the other parameters, he does believe that we are on a strong footing on the growth parameter as well. And as was also indicated by the Governor, Shaktikanta Das, where he said that we are going to be one among the fastest growing economies in the world, even at this lower forecast of 6.8%. So that's going to be a positive. The markets, however, are down in trade, not very happy with the policy decisions or the change in stance that the governor has delivered. 62,489 at this point in time for the Sensex, down 135 points. The Nifty also hovering near 18,590 odd levels at this point in time. Well, we'll keep an eye out on how the markets are progressing from here to help you break down what these macro data points really mean for you and for your wallet throughout the trading session and throughout this day as well. Do stay with us because we'll be doing further analysis of the RBI policy decisions, and do stay on for the press briefing that follows up very soon from here. Thanks very much for tuning in for now.
Tell us a little bit about yourself, Sridhar, because you come from fairly modest roots.